Hey traders, welcome back to the channel. It is Friday, February 6th. Hope you all had a good day of trading and didn't get too spooked or too shook out everything. So before I get started on the news, I just want to make an observation on the daily chart for the week. Basically this week, on the SPY at least, it was making a U shape. We started on Monday like this. We just kind of went all week as fell out. Monday was a green day, nice green day. Tuesday, Wednesday, and Thursday were red days. It just kind of bottomed out. And then today we came up again. So we made a very distinct U shape if you look at the daily chart candles for the week. Now, normally, under quote-unquote normal conditions, I would say this is looking real positive into next week, and I feel like we've got a lot of upwards momentum carrying into next week. But just the way things have been, I'm just not confident in anything, and I wish that wasn't the way that it is, but that's the way that it is. You can't deny the truth, and the truth of like what you feel and the truth of what you see on the charts. So I'm certainly not saying that I'm not going to be doing any trading next week, because I'm always trading. I'm just going to be keeping my size really small, and I'm going to be getting in and out quickly. I'm going to be keeping my approach a lot scalpier than normal, to just kind of try to take advantage of any one of these whipsaw moves that I see, in the intraday action before it reverses on me. So with that being said, let's go ahead and get to the news today. The Dow crossed 50,000 for the first time in history today, surging 1,207 points to close at 50,116. Under normal circumstances, that would be the only story anyone cared about, but this is 2026, where good news and bad news have become so entangled that Wall Street can't even really tell them apart anymore. The S&P 500 rocketed 2% to 6,932 today, climbing back into positive territory for the year. The Nasdaq jumped 2.2% to 23,031 as chip stocks staged a ferocious comeback. Nvidia was up 8%, AMD was up 8%, Broadcom was up 7%. After 3 days of brutal selling that wiped out over $1.5 trillion in market value, investors decided that maybe they'd overreacted to the AI spending panic. But here's where it gets weird. Amazon, which reported strong quarterly earnings Thursday night, beat revenue expectations and showed AWS growing 24% year over year, still fell another 7% on Friday. The company didn't miss earnings. They didn't disappoint on growth. They committed the unforgivable sin of announcing they'd spend $200 billion on AI infrastructure this year, roughly $50 billion more than Wall Street expected. So once again, I sound like a broken record. I've said this countless times over the last couple of weeks. Companies that beat all of their earnings, they sound great, everything looks great, and then it still trades lower the next day. So think about that paradox for a second. Amazon is spending massively because the demand for their cloud services is so strong, they literally can't build capacity fast enough. CEO Andy Jassy said, "As fast as we install this AI capacity, we are monetizing it." So that's not a problem. That's a company drowning in customers willing to pay for something they can't deliver fast enough. Yet the stock still cratered because investors have decided that big tech spending $650 billion collectively on AI this year, with Alphabet, Microsoft, Meta, and Amazon combined, represents some kind of existential threat rather than confirmation that we're witnessing the largest infrastructure build-out in corporate history. The chip stocks that got hammered all week suddenly surged because Alphabet's massive spending announcement means that somebody has to sell them the processors. Nvidia, AMD, Broadcom, these are the companies building the shovels for the AI gold rush. And Friday's rally suggests investors have finally remembered that massive capital expenditures don't just disappear into thin air. They flow to suppliers. Bitcoin has also had a wild ride in the last few days. The cryptocurrency briefly touched 60,000 overnight, which is down nearly 50% from its October peak, before violently rebounding to above 70,000 by Friday's close. That's a 13% intraday swing on a $1 trillion asset. Over 700 million in leveraged positions got liquidated in hours as traders got crushed first on the way down, then again on the way back up. Caterpillar and Goldman Sachs led the Dow's historic march, each contributing over 100 points to the price-weighted index. The gains reflected a massive rotation into cyclical stocks and financials as investors fled the growth at any cost tech trade. The Semiconductor Industry Association announced the sector will hit $1 trillion in annual revenue for the first time in 2026, which is years ahead of projections. Yet chip stocks spent most of the week getting destroyed before Friday's rebound. For the week, the Dow still gained 2.5%, while the S&P eked out a 0.1% loss and the Nasdaq dropped 1.8%. The Dow hitting 50,000 would normally signal unshakable confidence. Instead, it arrived during a week when investors couldn't decide if AI spending represents the future or financial suicide. So wrapping this up once again, we see the big U shape that happened in the market this whole week. And I am going to remain cautiously optimistic for next week. I have a slight bit of confidence that next week could be good, but at the same time, I'm going to remain very, very quick on my ins and my outs, and I'm not going to take anything for granted. And I'm not going to think that just because one day we've got strong moves going in either direction, that doesn't mean that the next day it might not immediately reverse on us. So you got to stay very, very vigilant in these times in the market. So that's it for today. Have a great weekend. Enjoy yourselves. And I'll see you back here on Monday. Bye-bye, everybody.